The real estate market in Asia has been sizzling over the past years, and with the region an important destination for business travel, it sparked demand for service residences. With me to discuss is Mr. Ronald Tay of Ascott Residence Trust Management. Mr. Tay, it's been 9 years since Ascott Reit launched. What's been your management strategy, and how do you ensure the stable and growing distribution for unit holders?
Today, Ascott Reit, I'm quite proud to say that we are the largest hospitality REIT that is listed on the Singapore Stock Exchange by asset size as well as by market capitalization. We have a three-pronged strategy. First, we have been very aggressive and active on the acquisition front. Second is in terms of active asset management. All the assets that we own, all the properties that we own, we ensure that they are up to date. This is obviously to drive the RevPAR for the property and to drive the underlying performance as well. And the last prong is in terms of prudent capital management. That is in terms of our balance sheet management, how we hedge our interest rate risk and our foreign exchange risk to mitigate the volatility of the earnings for the REITs.
We have, of course, been hearing a lot about the Asian growth story. So is Asia a key growth market for you, and why?
If you look at our acquisition over the last 18-24 months, I would say the bulk of them would be from Asia. Europe obviously is a big market for us, it's a very important market, but Europe is more a stable market for us. Whereas if you look at the growth market in Asia, I think according to some IMF studies, Asia looking at 2015, 2016, generally the growth will be about 5 to 6% in terms of GDP growth. And that is primarily one of our key growth drivers as well, because we are focusing on the corporate market, the extended stay market. So key indicators like GDP growth, FDI growth are important factors for us. And that is where we think that in the medium to long term, Asia will be the growth markets for the REITs.
You set a target asset value of 6 billion Singaporean dollars by 2017. Are you on track?
We have been growing very aggressively since our listing in 2006. Today we are about 4.7 billion asset size, and we will reach about 5 billion come 2017 with one of the contracts that we have signed over the last 18 months. We have acquired about 14 properties. We hope to continue this growth momentum, and I think given our mandate being a global mandate, we will look at both Asia, Europe, and of course, most recently, we have gone into the US market as well. So these are the markets that we will be targeting at, and keeping fingers crossed, we will be able to reach our 6 billion target.
Why did you choose to enter the US market, and why Times Square in particular?
Obviously, it's a very developed, very mature market as a hospitality market. And to be a global hospitality player, we cannot ignore the US market. And also, over the last 2 years or so, US as the economy has been on the upswing. Why Times Square? We focus mainly in the business cities. So obviously, where else to go but the Big Apple, New York City itself? It's a great location, Midtown Manhattan, just a 5 minutes walk from the Times Square. But most importantly, it is built as an extended stay product, which is very, very similar to what we do. So we like the product, we like the location. Obviously, the pricing is something that we find attractive as well. So that's our maiden acquisition in US, hopefully more to come.
And finally, how does the hospitality market differ between different regions, from the Asia Pacific to Europe and indeed the Americas?
For US and Europe, it's a much more developed market as compared to Asia. Asia, of course, including some of the emerging markets like Philippines, Vietnam, and even Indonesia. Because of the difference in terms of development of the market, the average length of stay in Europe and US tend to be a bit shorter because there are a lot more accommodation options available in developed markets such as Europe and US. The other main difference is that, of course, being a lot more developed market, the capital values of the real estates in Europe and US tend to be a lot higher as compared to Asia. It's important for us to have a good balance between the developed market, whereby the income is a lot more stable, and the growth market in Asia, whereby it gives us the growth in terms of the revenue or the income stream over the medium to longer term.
Mr. Ronald Tay, CEO of Ascott Residence Trust Management, many congratulations winning the World Finance Award for Best REIT Asia 2015.
Thank you very much. Thank you. And I'd like to take this opportunity to thank World Finance for conferring Ascott Residence Trust this prestigious award. And of course, I'd like to take the opportunity also to thank my staff for all their hard work for making this possible. And of course, all my shareholders as well, who have supported Ascott Residence Trust all these years. Thank you very much. Thank you.